Here's the EWJ, not well defined. EWZ, that's a little bit better defined. Here's a USO. This is the U.S. Oil Fund ETF against the S&P 500. You can see that it's not well defined, so I'd stay away from it. And all you're doing is, after you save these ratios, you're just kind of going through these to find out who's outperforming who in these cases. And what you want to do is you want a clearly defined trend. Now, here's a fairly good, clear, defined trend for a while here. This is the DBA. This is the Commodities ETF, Agriculture ETF, and for a long time it outperformed the S&P 500 from April of 2010 through February of 2011. Very nice, clearly defined trend with a good trend line, and you would have been able to get out as soon as it crossed this line. But for a while, for many months, it was a very nicely defined trend there. Some Australian currency against the UUP, against the ETF of the US dollar ETF bullish fund. You can see that the Australian dollar, the FXA is the Australian ETF, Australian dollar ETF, vastly outperformed the US dollar throughout this entire period from June of 2010 all the way through this topping period here in June of 2011. So the Australian dollar, here's the Canadian ETF, Canadian dollar ETF outperformed the US dollar as well. Here's the French franc, definitely outperforming for this entire period until we reach this peak, but a very nicely well-defined trend, and that's all you're really looking for. You're looking for the well-defined trends in here. Do not trade those markets that you can't see a well-defined trend like this one. The EWJ, it's a little bit more volatile, a little bit more up and down. I would stay away from it. That one, it's crazy. I would stay away from that as well. So you're looking for the really well-defined trends. Here's the British pound, not bad, but I like the French franc better. That's why I would keep a number of these different ratio charts set up inside my profit charts to just go through those. Here's another really interesting chart. This is the U.S. Natural Gas Fund, UNG, versus the U.S. Oil Fund, USO. You can see that USO has outperformed UNG dramatically here because of the downtrend here. So the UNG, remember, if the chart is going down, it's the first issue is underperforming the second issue in this case. So UNG has definitely been underperforming the USO. Certainly it's a well-defined trend. Now, another thing that you can do is you can create your own indexes. Let me just show you this. This is an index that I created. It's just 3 issues. It's Amazon, Apple, and Google. And so you can create your own indexes, which is really, really cool. If you go over here to the ratio chart setting again, you can enter in any 3 issues that you want. So if you want to compare, let's say, let's take a smaller section of the financial market. Let's take a look at a ratio. Let's say we wanted to go long financial instruments. Let's go BAC, which is Bank of America, Citibank, and let's take a smaller regional bank just for some. Let's go ahead and get this chart and see what it looks like. And you can see it's basically been in a pretty dramatic downtrend here. However, it looks like there's the potential here for a little bit of a bottoming process. So what you're looking for here, when you can create your own little index. Let's say you're interested in these 3 issues. You think these 3 issues, some of the financial stocks are going to start coming back. Then you would take these three issues, create your own little index. Those are the 3 issues you're interested in buying. Find out when they're bottoming as a group, and then you might say, okay, well, this looks like a little bottom here that's forming, and there's potential for this mini index of just 3 issues has the potential to go up. You can create your own little index and just buy each one of these shares and then keep this, save this ratio, and then refer to it every once in a while, diversifying yourself so that you have, you've got a regional issue, you've got a couple of national issues and international issues, and look at this ratio and determine whether or not things are going to start coming back. Maybe one of these issues will certainly outperform the other two, or two will outperform one, and then you want to switch it out. Let's say you don't like FNNG anymore, and you want another national issue in there because it's underperforming the rest of them, and you want to put in somebody like Wells Fargo. So you go WFC, and you've got your own, now you got a different chart, a little different look. Looks like it's still bottoming here. So, these financial issues, although it looks a little bit stronger maybe even, so you want to save that ratio. So every once in a while you want to take a look. You see it's in a downtrend. You got your own little stock index here. You take a look at compared to with the regional issue and without the regional issue, which one looks stronger? This one looks a little bit stronger. So you'd want to see if this is a bottoming process going on. That's one thing about ratio charts that are really nice, or little index charts, is that you tend to see not only the trends a little bit easier, but you also see the bottoming process a little bit easier. So that is an introduction to ratio charting. And in the next video, we're going to take it a little bit more in depth.